Hello and welcome to March's webinar from us at Normative. Great to have you all with us. Today we're going to be looking at the business side of sustainability and carbon accounting and how beyond compliance that can have a huge benefit to your business. So we're just going to wait for a minute or so to let people join. I see people are joining all the time as we set up. But while we're waiting, it'd be great if you could just drop in the chat where you're joining us from. We usually have a wide range of countries and regions covered here. So it would be great to hear where you're coming from. I know we're scattered across Sweden in the UK from a presenter's perspective in here as well. But here in sunny Berlin. I hope everywhere is sunny at the moment. We've certainly got it here in the south of Sweden at the moment. Dimitri, you're nodding your head, I think, in London as well. Another sunny Constance. Farah, good to see. Felicity in Surrey, welcome to you. And another from sunny Sweden. And Poland, lots of sun, and Brazil as well. Mauricio, I hope it's sunny there. It would be rather strange if it's sunny in Sweden and the UK, but not over in Brazil. But fantastic to have you all with us. I think more people have managed to join us now. So we will kick things off and jump into a bit of housekeeping for today's webinar. We're with you for 45 minutes today, but the webinar is going to be recorded. So if you want to review this afterwards and go over certain sections, or you want to share this with any of your colleagues, we'll send it to you over email after the session as well today. Questions are out. Please submit your questions. You can see in the bottom right corner of the screen we have our questions tab there, so just click on that, drop your questions in there at any point during the session, and we will get to as many of them as we can. If there are some we can't get to, then we will get back to you after the webinar as well. And then just final note, once the webinar has finished, you will automatically be redirected to a short survey. If you could just take 30 seconds to answer a couple of questions for us at the end of the webinar, that would be really, really appreciated, just to make sure that we can make sure we make these webinars as relevant and as topical as possible for all of you joining. So, on to today's agenda. As I said, we're going to be looking at the broader business benefits of carbon accounting and how you can apply that in your business. So we're going to touch on first, Dimitri, one of our climate strategy team, is going to take you through the bigger picture and the benefits how you can apply carbon accounting to be a central part of your business's growth, really. And then we're going to be moving on to look at some real life practical examples of how that is actually happening in a business. I'm delighted to have Stephen Clegg joining us from Top Speed Couriers. So just to start off before we jump in, Dimitri, great to have you with us. Can you just give us a few words about yourself and your role here at Normative before we jump in?
My pleasure. My name is Dimitris Stoidis. I'm a climate strategy advisor here at Normative. What that means basically is I support organizations and clients from measuring their emissions and all the way what they can do with them, taking actions, reducing, engage with suppliers, and of course how that also relates to regulations. And I'm based in the sunny London, as you said.
Fantastic. I hope it stays like that. It's always unreliable in the UK, so you never know. Great to have you with us, Dimitri, and fantastic to have you with us, Stephen. Stephen is the CEO of Top Speed Couriers over here in the UK, and it's going to take us through some fascinating insights into how Top Speed Couriers are using normative and carbon accounting to drive benefits across their business. So welcome to you, Stephen.
Hello. Thanks for inviting me here. I'll just give you a little bit of a background to Top Speed as well, should I? So I formed the company myself in 1985. And we now operate a fleet of 200 vans, company-owned Mercedes-Benz and Volvo truck as well. Half the fleet is electric. We've got 190 or 200 drivers, employed drivers throughout the country, and we operate on government contracts and provide specialist services for carrying dangerous goods, secure goods, all sorts of prohibited items and controlled substances. And that's us.
Fantastic. Well, brilliant to have you with us, Stephen, and I'm very much looking forward to getting into our Q&A shortly in this session. So before we do that, I'm just going to give a very quick overview of Normative for those of you who aren't as familiar with us. Our vision here is to make known and reduce the sustainability impact of all economic activities on the planet. So what this actually means in reality is that we spend a lot of time and expertise delivering really accurate carbon calculations for our customers. So the reason for this is that when companies can see these emissions in that granular detail, you can actually manage them. You can report on them, meet compliance requirements, CSRD and other requirements. You can also implement reduction initiatives and move towards science-based targets. And as we're going to cover today, you can use it as a central pillar to growing your business as well. So to kick us off, I'd like to start with a quick poll, and you should see this pop up on your screen as Victoria has kindly set this up. We'd love to hear your thoughts on the big topic at the moment, to put today's webinar into context. So we'd love to hear how your business has responded to the EU Omnibus simplification package proposal. Of course, just a proposal at the moment, but we know it's creating a lot of discussion. So we'd love to hear, before we go into looking at why carbon accounting can benefit your business beyond compliance, I'd love to hear your thoughts on this. Quite a lot of not sure discussing plans internally at the moment, which I think is very understandable given the current climate. And then 36% quite clear we're not changing anything, waiting for the legislative process to be finalised. So thank you all for your input there. It's very important context for what Dimitri is now gonna take us through, because regardless of how reporting requirements, regulation evolves and changes in the years to come, there are so many more reasons why carbon accounting is pivotal to businesses. And Dimitri is going to take us through some best practice and guidance on what we're seeing from organisations. But I will hand over to you now, Dimitri, to take the lead and run the audience through your insights.
Amazing. And I will talk about beyond obligations, the unseen benefits of carbon accounting. Now, the corporate world often views sustainability and business growth as opposing forces where one must be sacrificed for the other. Right. However, we do see a lot this perspective of changing. For example, Unilever has recorded 69% faster growth in sustainable brands that delivers around 75% of the company's growth. Now, there are lots of real world examples like this, and research demonstrates that sustainability and growth can and should go hand in hand. And this is exactly what we're going to dive into today, and some of the reason of what that is. So in here, we can see some of them. Of course, we have limited amount of time, so this is not an extensive list, but it's just to give you a bit of understanding. And now, for many of you that are leaders and experts in your fields, the following areas probably doesn't come as a surprise on why sustainability carbon accounting should and must, rather than good to have. And of course, that includes customer retention and new revenue. We see how, and Steve already mentioned about public procurement and what the requirements, especially we see in the UK, how that looks like. Investors and financing, efficiency and risk mitigations, and of course, regulatory compliance. We know this can have direct impact to the bottom line. So we see how that looks as well. With that being said, I think we can go into the bit and we see exactly what that means. Now, customer retention and new revenue acquisition, we know will increasingly depend on companies requiring the suppliers to provide emissions data and reduction plans as part of the construction agreements. Now, I think examples is always best to talk. So let's take Tesco as an example. Tesco has been a leader in carbon reduction, working close with suppliers for many years. Their science-based targets that they set includes a goal to reduce Scope 3 greenhouse gas emissions by 55% by 2032 from a 2019 base year. Now, as we know for Scope 3, available methods to measure it include spend calculations, which is an estimations, activity data like kilograms of goods, supplier-specific data, and of course, product carbon data. Now, with spend, which a lot of organizations use to start their journey, the only way for Tesco to achieve its targets with spend methodology is for them to start spending less. And of course, for a growing company like them, that is not feasible. And this is where the role of Tesco suppliers becomes crucial. Tesco will require and does require suppliers to measure their own carbon footprints and set science-aligned targets. This enables Tesco to reduce its own emissions by partnering with suppliers who are also actively reducing their own emissions whilst also continuing to grow. Now, for suppliers who aim to work with organizations like Tesco, some of you might be here in this webinar, measuring environmental impact and taking action to reduce it is no longer optional. It's a requirement to retain existing business or, of course, acquiring new revenue. And of course, Tesco, as you can see in the bottom of the slide, isn't alone. Companies such as Salesforce, Vinted, WH Smith, Expedia, and many, many more have also publicly committed through SBTi to engage their supply chains by setting supplier engagement targets. And with over 10,000 companies publicly committed to emission reduction through SBTi, achieving these targets hinges on collaboration with supply chain partners. So this will only increase. And of course, following that, similar to companies, governments and countries have their own targets and roles to play in the overarching battle against climate change. For example, based in the UK government has its own plans to drive UK net zero by 2050 agenda by ensuring that government spending supports businesses committed to reducing their carbon footprint. Now, this policy applies to suppliers bidding for some government contracts with an anticipated contract value of around £5 million or more per year. Now, these suppliers must demonstrate, of course, the commitment to net zero by 2050 by first reporting their emissions and outlining what they have done or plan to do to reduce them. It's important to note that these suppliers will need to provide annual updates, meaning this is an ongoing exercise rather than like a one-time thing. Like the example of Tesco before, if the organization wants to compete in public procurement contracts, measuring environmental impact and taking action to reduce it is no longer optional, but a requirement to retain this additional or existing revenue. And that takes us to the next point, which is, now we talk about retention and acquisition of new revenue, that key benefits, but also environmental performance can have influence into financing. And if we start first with investors, it's an interesting McKinsey global survey on valuing ESG programs that show 83% of C-suite leaders and investment professionals expect ESG programs to contribute more shareholder value in the future. As a result of that, they also indicate a willingness to pay a medium premium of 10% to acquire a company with a positive ESG record over one with a negative record. And just for reference, this also holds true even for executives who believes ESG, carbon programs have no effect on the shareholder value. Now, these investors, of course, we know a lot of time financing is a key part of doing business, and similar principles apply also to it. A study from the European Central Bank titled Climate Risk, Bank Lending, and Monetary Policy showed that firms in the top 20 percentile of carbon emitters are charged interest rates that are on average around 40 basis points higher than those in the lowest 25%. What that means, in essence, zero area banks not only price the current climate risk exposure of the firms they lend to, but also the future risk exposure. As a result, they charge a higher interest rate to firms with higher current carbon emissions and a lower rate to those that commit to future emission reductions. And we see this a lot also with our own customers. Now, we talk about acquiring new revenue or existing one. We talk also investment financing, but also efficiency and risk mitigation can be a big player here as well. Carbon accounting, quite similar like financial accounting, is a tool to minimize risk in the business planning by eliminating ambiguities in record keeping and by tracking down problem areas. Now, of course, thorough and science-backed carbon accounting protects the company from also audits, which could reveal non-compliance or even unintentional greenwashing. And we know there's a lot more legislation coming around that as well. Now, when business use carbon accounting, something we do daily to calculate emissions through the value chain, the result map out emission hotspots can be used to make data-driven decisions to reduce emissions, as a result, often resulting in cost reductions. Cost-saving initiatives can include from things like energy bills to less fuel, right, for a fleet, and even for better supply agreements. And addressing these operating expenses can affect profit as much as 60%, according to another McKinsey research. And I just realized I haven't changed my thing. Now, let's take Eltel. And I think it's always best to talk with specific examples. And Eltel, for reference for people that might know, is a service provider for critical infrastructure that enables renewable energy and high-performance communication networks. Now, Eltel leverages its emissions data to optimizing travel routes. This optimization leads to, first, reduction in both emissions, but also costs associated with things like fuel and man-hours. And of course, Eltel is merely one of many examples. Now, we talk about a few different ones, but regulatory compliance is something we hear all the time. And we saw like around 60% of you still wondering what that means. So I think it's important to address this elephant in the room around EU Omnibus simplification package. Now, the revision of several aspects of the CSRD are in the first proposal, right? As we probably majority of this room knows, this comes in terms of like the size criteria and also different thresholds. Under the new proposal, because it is a proposal, several organizations will not have to report under the new requirements. However, you should understand that it's only the beginning and it is a proposal. Now, the European Commission publication of the is seen as a complex and lengthy process involving things like amendments, negotiations, and of course, further discussion across multiple different EU institutions. The timeline for adoption remains quite clearly uncertain, but if it follows the typical legislative path, it could take years before it's formally enacted. And of course, given the complex sustainability regulation and varying priorities in EU member states, negotiations may lead also to significant adjustments in the final version, which right now might be also unclear. But the bottom thing is, until the regulatory changes are formally adopted, companies expected to maintain the current sustainability reporting obligations, meaning that any delay in compliance, it will result to also legal penalties such as fines imposed by, of course, the national authorities under the CSRD. These penalties can vary depending on national laws, but failure can mean like severe financial and reputational consequences. But also, companies may face restrictions on access on EU funding or investments, which of course, we talk about profits at the beginning, right, and how sustainability support, this can have direct impact in the market position of those companies, right? With that being said, since we know governance can play a big role, I think it's important to us understand what does that mean, because we talk about so many different things. So if we can take one step back, let's see how the regulation fits under the overall net zero governance. And according to Oxford study, the net zero governance primarily relies on 4 key tools. We have volatility standards, these like SBTi, we talked at the beginning, like how TESCO and other organizations submit the targets. We have orchestration campaigns like UN Race to Zero, so I'm sure a lot of people in here might know or be part of it. And then we have international standards, things like ISO, and finally we have regulations. Currently, we focus on the first 3. Large organizations such as TESCO commit on setting voluntary SBTi targets. Social organizations like UN promote convergence around high standards, and then ISO or other related organizations aim to create board-reaching standards, paving the way on how we can reach net zero the right way and consistently across the industry. However, all those three tools that I just mentioned remain voluntary and also optional. So regulators in turn can mandate action and act as a greater lever to make and create action overall. As we have seen, regulations take time to be set. I think the EU is a great example where you have many different countries with different opinions, and it historically takes quite a long time to align legislation. But legislation is an inevitable step in the governance ladder to ensure widespread enforcement. So that comes to my main point here around legislation and what that looks going forward is the solution to sustainability fatigue isn't less policy, but it's actually better policy. We need consistent, equitable net zero policy that provide clear guidelines and targets, reducing uncertainty, enabling strategic business transitions, like things like market incentives to fundamentally shift, rewarding net zero initiatives with maybe tax breaks, grants, and subsidize, driving both climate action and cost reduction, which is also the aim of this webinar to discuss. This will not only accelerate the benefits highlighted in the previous section of this presentation, but also enable. And as efforts to operationalize net zero deepen and evolve in the years to come, building this conveyor belt that we discussed that links the different kinds of governance tools together can, and in my opinion, will create governance ecosystem around net zero that allows to decarbonize a global economy. So to recap, the interim business should view disclosure requirements as opportunities, no burdens. Rigorous reporting foster operational introspection, revealing things like climate risk, and enable strategic development. For example, a detailed value chain assessment, which is part of CSRD, allows organizations to uncover potential human rights issues, map out the entire value chain, and discover reduction opportunities and data gaps, as we saw with the example of Excel. And leading to prioritize high-impact action paths. So think impact vs effort. And this is coming to the end with me. I give it also to Steve, but to recap for me is reporting, seen as a tool of improvement. It builds a solid sustainability reputation and creates valuable business outcomes. Attracts more customers, both to retain and acquiring, secure investment funding and better financing terms, improve operational efficiency, and of course, better risk management. With that being said, I'll give it back to Michael in the studio. Take the second section.
Fantastic. Thank you so much, Dimitri. I think it's a really comprehensive overview of the different areas where carbon accounting can have a big impact on your business. And I think in the current context, it's really important to be clear on that. And I think that gives us a perfect platform to bring you in, Stephen. Stephen Clegg, CEO and co-founder of Top Speed Couriers, as we mentioned at the top of the webinar. Because I know, Stephen, you got so many fantastic insights and real life examples of how you're actually using carbon accounting to the benefit of your business. So it's a perfect time to bring you in. And I think a great place to start would be to ask you what the initial challenge was that ultimately brought you to Normative, but got you looking for a carbon accounting solution.
Right, well, fine. I can, yes, I just thought actually, firstly, I thought what Dimitri said was really interesting. And there's so many little facts that came out that I recognize, that things that he'd said, so, oh yeah, I recognize that. I remember that. I remember this and how it, from our perspective, we found these things out, in a difficult way, but actually I thought there was some really good points there. And we came up, we've got lots of, a big part of our business is our government contracts, where we supply specialist services to government departments and government agencies. And we are on frameworks with the Crown Commercial Services, which is the buying arm of the government, effectively. And we've been doing that since 2012 and been very successful at it. So really honed our trade on that and the way we approach tender responses. And again to 2021, and a new framework came out late 2021. And one of them was, social value has been creeping into contracts, for 10 years or so. Not high scoring questions, but they're always there. Social value, environmental, and we've done environmental, ISO 2014 and 14,001 environmental, and so we're pretty good at that and identifying things. generally. But this question was, and it wasn't particularly an absolute must. It wasn't marked. It just said, this is what's going to be coming along the line for you guys who want to supply government. We need a carbon reduction plan off you. And I think they were very loose about it, and they kept loosening the requirements of it. But they said, we want to see a carbon reduction plan submitted with your bid, or at least before you get awarded any work off this framework. So it's really important. I looked at this open mouthed because it said, here's a template for your carbon reduction plan, and you've got to set a baseline and a net zero date and report on all these figures in tons or whatever it was, the figure. And it was jaw-dropping. And it was a big moment because, well, I can answer most questions, but how am I going to do this? So the first thing I went on to is look at all big companies and see what they do, because people are, carbon accounting and stuff was coming into it. And actually, I couldn't find any that really big companies, big corporations. I couldn't find any that conform to this government template they'd given us for a carbon reduction plan, which looked fairly simple, really, but just had data in it that I just didn't recognize. And so we had a meeting at work, and this is the problem we've got. We need a solution to it. And actually, it was Sarah, who is our assurance director, who handles all our ISO accreditations and HR and things, oversees all those functions. Came along a couple of days later and said, I found this company called Normative. You might want to give them a try. And the world opened up to us with how Normative was basically to us a financial accounting platform like Xero or Sage or something, and it was a way that we realized it was a way. It was the thing to open up. We either decided to take the route of not spend too much money on it and fudge it and kick the can down the road, or seize the initiative and you see it as a business opportunity and a way to set ourselves apart from the competition, which was all we've always striven to do, because we know we can increase revenue by doing something a bit more special and unique than everybody else. And that's really the beginning of the journey for us, and how we were able to then work out what we needed to do to move it forward. And I'll just tell you the last little bit of that question. Actually, I checked a few days ago on that frame. So the carbon reduction plan is going to be now, I think it's 10% of all 10% of the marks for all government contracts are going to include marks for social value and environmental. And I had a quick look. So when we first got on the framework, we were on other frameworks as well. The Crown Commercial Services provided links to everybody's carbon reduction plan because it had to be on your website. So when the framework first was published, there were several companies with links to their carbon reduction plan, and CCS would validate, they'd check it over and validate it and tell you whether it was compliant or not. And there were quite a few of these links I looked at. I thought, this is rock. There's figures here you're missing. There's big gaps in what you're reporting. A courier company cannot have no emissions from diesel just simply because you use subcontracted drivers. Huge gaps. And I thought, well, this is a bit wrong, but actually it was somebody at Normative said, I said, is this greenwashing? Yeah, it is greenwashing, but why do you keep a lid on it, Steve? Because you're way ahead of the field on this. And I looked recently, and I think with one of two companies still with a link to a carbon reduction plan. So I think, okay, I'm glad I kept my mouth shut and didn't say too much. So that brings us pretty much up to date with that.
That's a fantastic, really tangible way to see the benefit of being on top of your emissions reporting, right? If you can physically see that list of competitors going out for that government tender, it's quite a clear indication, really, isn't it, of how important that is and getting that.
Yeah, it's a big impact. Yeah, you don't have to read anything just to count the people on the supplier framework to see if it's working or not. And so yeah, it is really interesting. And if you can't generate a meaningful carbon reduction plan, where are you going to start with it all? So and if you to have a plan, you've got to have the data to crunch as well, or a way of data crunching the data together.
Absolutely. And that's a very clear commercial driver there. Like, are there any other cases where you've been able to do that, or any other benefits from those interactions with governments, with those buyers in government and those higher regulated industries that you work in, that you've been able to unlock by virtue of the insights you've got from the carbon accounting you're doing?
Well, I wish Tesco were a buyer off the framework, because boy, they would love us. And we've come across other companies like AstraZeneca who are leaning that way, and that's on a more strategic sort of corporate level. And I think further down the chain, I think the buyers aren't particularly knowledgeable, so get flanneled by suppliers who are willing to fudge the facts, and they sometimes don't fact check what a supplier is saying. They just accept it at face value and market accordingly. But there are some government departments that are really savvy and really appreciate a well worded response to social value. And actually, what carbon accounting does is there's two questions: what you're doing about for your employees and the community, and the other one is environmental. What you're doing about the environment, sustainability. And actually, carbon accounting puts the two together, because you can then start answering questions and demonstrating how you're making life better for drivers who have electric vans and therefore have to stop to charge at some point during the day, and therefore take a break that's required by the regulations, not just say they do it, which people don't. Van drivers, typically white van man, drives around wanting to get the job done as quickly as possible, but having an electric van, all of a sudden you have to comply with the rules, the driving rules for vans, which there are. And it's just nice the drivers have a much better working environment. The vans are better laid out, they're more advanced, they're easier to drive, and they're safer. Got lots of safety features on them. But also answers a question fantastically well and this is a question: what are you doing the question is, what are you doing to reduce pollution in inner city and urban areas? And I saw a link the other day in one of the newspapers that the UN have produced a report that there's a direct link between diesel emissions and cancer in children, or lung disease or something, and I have to go back and check what it is, and there's a link on our website to it. I think, bingo, here's my answer. So if you're a government buyer and your offices are in city centres or urban areas, which a lot of them are, all of a sudden Top Speed has the answer for you, because this is what we're doing to reduce emissions with running electric vehicles. So there's no pollution. So it's not only is it emissions, it's pollution as well. So it really gives you, and you can demonstrate that, and then if you've got the facts of your carbon reduction, you can insert a little table into your response that's sometimes restricted to just a few hundred words. It's a real big impact to see. You can say, well, this is what we've been doing for the past 3 years, and this is where we've got to, and this is where we're going to end up. So yeah, and actually at the moment, I mean, contracts come around every 3, 4 years, 5 years maybe. So we're still working on contracts where some of the buyers weren't really so savvy, but we're seeing more and more that it's diluting that. They're really crystallizing what they want out of it. So I can't actually give you I just know that when we get the feedback, even on tenders that we've sort of bid for and lost, and we kind of knew we'd lose it because it wasn't specialist work, we just want to see what the evaluators' comments are, and we always score very highly for social value. I mean, we're a company that employs a lot of people, so we have to look after them. But actually, we want to invest in new technology, and electric vans are the way forward. And it's difficult, but actually there are benefits and the results that you can shout from the rooftops about.
I think that's really interesting. I guess what you're saying there, in a way, as these government departments and other bodies, other businesses get more savvy, you can really act as you can help make them look good, right? Because if they're expected by their bosses in government, in this case, to have a really tight, compliant supply chain, you're a perfect ready-made example of that. And if you can back it up with the data, then that's surely gonna help them and make them look good. If you can be a core part of their supply chain that they then present to their bosses as well. So I guess that's increasingly an important play there as well.
Well, I'll certainly download Dimitri's presentation, because if I wanted to, and I think I will, I'll see how later how I get on. I'll go to Tesco procurement, and I won't email them a list of rates. I'll email them a carbon reduction plan, and I'll say, when we get the figures for this current year, where we've introduced a lot of vans, electric vans onto the, I'll just say, this is what we're doing. Is this any interest? And we don't really supply normal corporations with general courier services, but perhaps Tesco's will find us something to do, because we can give them all our, they'll take our scope their car emissions for their scope 3 emissions, and then they'll report them at the food chain. And I think that's what government want to do. The government departments are really not good at managing these sort of things like maybe Tesco's is, and they really want their suppliers' emissions so they can report back to the Cabinet Office, the UK government, say, look, guys, this is what, can we have a bigger budget, please? Because we're really driving down emissions here. So don't take our budget away because we're doing what you want. And I think that's the way it'll go. It's just not really, it's just gaining momentum, and it's not really just quite happening yet. But that wouldn't stop us trying to get into it as soon as possible, because to delay it will just mean you're not educated on it.
Absolutely. To move it on then, Steve, I know this has been a big change for you, right, in your organization. So I think it'd be really useful if you could take us through some of the challenges in your market in particular that you've faced in putting carbon accounting at the heart of your business, of the decisions that you make in your business, because I know it's been a big change for you and a big part of your business now today.
Okay. So, I mean, on it, it's really little things. Actually, something that jumped out at me a short while ago, and it was complete chance. But we look at, we see the dashboard, and you look around on it, and you see your emissions intensity and really nice things like that. And I just happened to click on something about cardboard, and without even trying, we'd reduced our the amount of cardboard we send away for recycling by a huge. The graph was just it was just amazing. I thought, I don't know how we've done that. And then I was reminded that during COVID, we were taking lots of test kits in, and there was lots of discarded packaging and stuff. And we were recycling it. We sent it away for recycling, and we reduced it because that work kind of went away. But it kind of demonstrates that's a good, it's a good pitch for it. It's a good pitch for anybody. So this is what we've done. And yes, it was by chance, and maybe it was because of the business changing. But it still shows that just little things can have a big impact. And if you're selling your wares to a buyer, you'd use any advantage you possibly could to say this is what I'm doing, even if it says, well, that was just an incidental, a side thing. But that was just a small thing. But for us, when we could see where the figures were and how things could change, or how things could possibly change, scope 1, 2, and 3, and you could drill down. I mean, we're a transport company, so we burn vast quantities of diesel and get through a lot of vans. So the main thing is, can we make the vans last longer? Can we service them ourselves? Can we do things? Can we get better tires that last longer? Can we buy products that last longer? Buy original OEM parts off the manufacturers and things like that. And we've been doing that for years. But actually, when we introduced the first few vans onto the fleet, nothing much really happened. And we wanted it to happen, but we had to learn how to get those vans working efficiently. And then we started to see what really happened is, in the last 18 months, we bought more vans, and slowly those emissions starts to come down, Michael. And when it starts to, it's like wanting to take candy off the you had one bit and you want to take another bit because you see. So we'll buy another van and see what happens. Well, can we have 4 more vans? And then Mercedes all of a sudden got very interested in us and said, how many do you think you might be buying? So we said, as many as you've got, because we could see the change happening, and then we started telling customers about the graph and how we're reducing diesel and increasing our electricity usage. And that was, that's a really, for me, that's an excellent selling feature. We can show people, we can demonstrate, and we've got lots of competitors who greenwash. And you're right, I think Dimitri said there's some rules coming in, and they'll take ages probably. And there are lots of, and I've seen it recently. I saw today somebody's website, and it was very well presented, but no carbon reduction plan. But they're doing everything to achieve sustainability. And another one said we're doing everything about carbon neutrality by offsetting, but no net zero day and no carbon reduction plan. So it's up to the buyers to try and work this out, but who's telling, who's fudging it a bit, but actually having it all the data there before you, somebody will pick up on it who knows what they're talking about, and I think that's just the key for us. You've got to keep doing. It's not going to happen all of a sudden, but to have the data to hand to be able to put in your bids and to demonstrate to prospective customers that you're doing something about it, is a starting point for it anyway.
Yeah, and I think that's a really key message that you're talking about there. I think you mentioned emissions intensity as well, one of the features in normative, but it's having that data at your fingertips allows you to understand, as you say, when changes you're making are actually having an impact, so that you could start, you know, if you invest money in that area, then you've got a good chance of having that impact you want, rather than just kind of sort of throwing good money after bad on a hunch of what you think might work and help, but you really don't know. So it's really critical to have that insight to be able to work out how to spend your money effectively.
Actually, and that's sorry, that's a very good point. I mean, if you have money, how do you know where to spend it unless you can account for it? But you do that with your profit and loss account, with your monthly management information that your accounts department send to you, your finance department, and you think, oh, okay, I know where I can save a bit of money here and I can do things better. And that's exactly this. That's just what a carbon accounting engine does. It just gives you the data in a way. And with normative, it's presented in a way that's so easy to understand. And like I say, when you click on that particular bits of it, especially the intensity tab, and that's a big wow, look, we've grown, we've doubled in size, but actually we per pound of sale we're reducing the emissions here, we're holding our own, or we're doing something. Gives you a good takeaway on it anyway.
Yeah, fantastic. Well, thank you, Stephen. Really eye-opening, and fantastic. I'm sure hopefully for everyone joining to hear those real life examples of how you're working with carbon accounting. I know it's having a big impact on your top speed careers as well. So thank you so much for sharing that with us today, Stephen. It's been great to have you on. We're close to the end of our session today. We'll have time for a bit of a Q&A. Before we do, I just want to promote, we have coming up on the 1st of April, a live demo webinar that's coming up as well. So as you can see on screen here, you can register for this on the 1st of April. We'll have one of our product managers, Tristan, will take you through in detail exactly how normative works and how it can benefit your business as well. So please do sign up for that. Next up, Q&A time. We have time for a couple of questions. So I'm going to bring you in, Dimitri. First of all, on a number of the points you mentioned, one of the points you mentioned was about finding emissions hotspots within your supply chain to identify where you can save energy costs. This question says, we have a huge international supply chain. Where can we start with this?
That's a great question, and I think it's I think what we hear with a lot of customers, especially some have never done before, it's a classic question. So first, you start by just starting, right? That's the start. Let's start getting data, understand first what is missing, right? And then from there, you can start being like, okay, what is what is those top areas that my mission might coming from? A lot of times you might just, because of your business, the way you operate, right? I think Stephen's business, for example, no matter where they operate, most likely like scope 2 electricity will be big because just the core of the business, right? But then it's about how, as an entire organization, how you democratize that action taking. So every maybe country, department are empowered to be able to take those actions. So what I say is you start first by start measuring, understand what you need to do first to improve, because that a lot of times is a step, right? You might not have the data. Then from there, it's about start one thing at a time. Start with that impact vs effort. It's hard to give specifics if I don't have an example, right? But a lot of time it's quite easier to know where you need to start with those big ticket items.
Impossible to handle everything at once. So just time for one more question. I think we've got Dimitri coming to you, and we mentioned this in the chat with you, Stephen, as well. But are there any practical steps that businesses can take to make sure they're not accused of greenwashing, even if it's unintentional greenwashing that you mentioned as well?
Practical steps. I think. Well, I think you'd have to have the data. You have to crunch the data to know if you don't know where your starting point is, you would probably encroach on greenwashing if you just made unsubstantiated claims about what you were doing. We all try and do good things, and that's fine. But actually, greenwashing is about claiming something's happening when it's really not. Like I'm running a fleet of electric vans when actually you've got one, I think, or misnaming things. I think on the basic, I think you just stick to the facts, don't you? I think that'd be really easy. Stick to the facts of what you know, and you won't be greenwashing, I'm sure.
And if I could add one thing, can only second what Steve said here, but it's also just being transparent and honest, right?
Yeah.
You can never know everything, but just being stay where your limitations are, stay where you're going to improve. And a lot of times just welcome other people to support you, right? Because as we said, you can never do something by yourself. You need to work with your suppliers, you need to work with your entire value chain and different stakeholders. And of course, you can always come to us if you are a customer to support you, if I can say so. But overall, I think transparency is key here. Because it's a marathon, not a sprint.
Oh, definitely.
Yeah, absolutely. And it's all about getting started, as you said earlier, Dimitri. Well, that does bring us to the end of today's session. I know we've got a couple of questions that we haven't got to yet, but we promise you we will get to you after this webinar. We'll follow up with responses there. So thank you for engaging today. Thank you, Dimitri, and thank you, Stephen, for joining us. It's been fantastic to have you with us today, and looking forward to continuing to work with Top Speed Couriers in the months and years to come as well. Final reminder, you'll be taken to a survey page in a minute when this webinar closes. We'd really appreciate it if you have 30 seconds to give us your thoughts on the content today and what worked for you. But otherwise, thank you so much for your time today, and we look forward to working with you and speaking with you in the coming months.